My name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex. Chicago soybeans. The move up from the October 2023 V bottom created a mini head and shoulders top over early November to early December last year. When the break lower happened down through the neckline of this head and shoulders top, it also broke down through the lower bull channel line of the early October to early December 2023 bull channel, plus the 50% Fibonacci line of the late May, early July move in 2023 at 1349. As you can imagine, breaking all these trend lines so closely associated with each other as they were back then, as well as a 50% Fibonacci line, required some considerable force, and prices have dropped ever since. Though there has been some hesitation this past January. But the bearishness has seemingly reasserted itself last week and this, though with a small question mark over it still, as we've seen another low close, like last week, not seen since November 2021. So what's next? Well, the little hesitation we had during the middle to the end of January, possibly even now, this hesitation created a small descending wedge pattern over January, currently 1207 to 1186, and coming to an apex towards the end of next week. And we might see a small spurt of action on the back of breaking of this. We'll see. It may be aesthetics, but the way the descending wedge pattern sits makes it look like it's pointing the way lower. This observation does not back up this idea, of course, it's just an observation. However, I would caution once again, as I did last week, that we are close to the low seen in May last year at 1193, and we all know how that created a 3-day bullish doji star pattern, led to a really good V bottom and a rise thereafter. In addition to this, we have support below at the 2021 low at 1181 and the December 2020 low at 1142, and of course the 61.8% absolute Fibonacci line at 1106. But not that much beyond that right now. More importantly, I drew last week an early July to mid-November 2023 bearish Andrews picture, more as a way of expressing the bearish angle of attack here than for anything else. The market is sticking close to the middle time, currently at 1205. The only other thing to bear in mind is not here, but in Chicago soybean meal, and that is the well highlighted annual key reversal down we saw there for 2023. It's not directly related here, but not worth ignoring either. Chicago soybean meal. After establishing a horn top in mid-November 2023, something I'd cautioned about 11 weeks ago, prices dropped down through some major supports, and in the process of heading lower, created two lagging indicators, dead crosses of the short medium moving average, currently at 385 even, down through the long moving average, currently 403 even, and also down through the medium moving average, currently 395.5. In mid-January, prices hit the congestion zone, 363.70 to 368.80, and this was where I had cautioned 8 weeks ago we might see some hesitation. Now it's due to the low back in October 2023 that eventually led to that big horn top in November last year. Well, prices sliced through this congestion, but in the process the erosion there caused another hesitation, this time between the original congestion area overhead of 363.70 to 368.80 and the next smaller congestion below, which is around 349.20. This hesitation only just started over the last 2 weeks or so and was not certain of its durability, yet it did cause a slowing in decline, which has seemingly resumed yesterday with first clear close below it. We now have a small area free from congestion until the next small congestion at 342 even, and then again a large area between 336.30 and 338.10. This latter one contains the 61.8% absolute Fibonacci line at 336.30. Yet all that being said, there is one key feature I need to once again repeat and emphasize. I raised it as a possible feature here 34 weeks ago, and it came about at the close of 2023. And that is 2023 was an annual key reversal down. Now this hangs over this market more than anything right now, and all action should be seen in the shadow of this pattern. Chicago soybean oil. The September to November bear channel from last year had been the main driver lower in this market over autumn 2023. The main congestion band between 56.34 to 59.44 was overcome by early October, and prices pushed lower, easily down through the February 2013 high at 54.15 and the March 2013 high at 51.26, though not so through the interesting 38.2% Fibonacci line of the big March 2020 to April 2022 move at 48.95. This surprising support slowed and stopped the market, turned it higher, and 12 weeks ago caused a break higher up through the upper bear channel line and created a small bull channel. However, this 4-week-old bull channel ran out of steam, capped by the combination of the sine wave, nice lovely little sine wave, that is highlighted in green on my daily chart, of the declining short medium moving average currently at 49.01, and also the same February 2013 high support that is now resistance at 54.15. In early December last year, prices broke out below this small bull channel, though the move lower has not been as easy as it was back in autumn 2023. Eventually, at the turn of the year, the market broke down through the 38.2% Fibonacci line at 48.95. And we had the opportunity to form a very extensive bearish halfway hesitation, the bear channel being one leg and the bull channel being the hesitation, with a potential low as well below 40 actually, and that's 40 even. However, the decline, and we have had a decline, has been shallower than in autumn last year. Interestingly, possibly being dictated by the now shallowly declining short medium moving average in green. Prices are now down to the area of congestion we last saw in May 2023, consisting of 3, possibly 4 bands. These are 44.68 to 45.04, made up from the 2014 high at 45.04 and the May 2023 low at 44.68. Then the tight 43.80 to 43.94 zone, made up of the 50% absolute Fibonacci line at 43.80, and the April 2014 high at 43.94. Then the interesting 42.65 congestion, which has the neckline of the October 2019 to February 2020 head and shoulders top running through it, currently at 42.58. And I suppose we also have congestion further down at 41.15. I mention all this because some 31 weeks ago and numerous times since, I said the following about the big descending wedge pattern that was on my chart back then and is high up off the top of my chart right now. I said the following, and I quote, "I would consider this descending wedge pattern may, just may, have lately morphed into a possible scallop pattern," end of quote. This is a big pattern idea, and market declines since autumn last year fits in with this idea, with the exceptions I voiced of eventually witnessing a fall down to the area of the May and June lows between 48 even to 46 even, which is roughly where we are now. I'm now keeping a very close eye on this idea, as any significant breakdown below the 48 even to 46 zone could signal the start of this move lower. Now, 3 things to bear in mind. Firstly, this is a really big pattern stretching from November 2022 to date, so do not expect any immediate sharp movements. Secondly, data indicates about 3 out of 4 times the market breaks lower. Just be aware of that. Finally, to look to this week's action as a potential contraindicator, you see we are set up this week for a potential weekly key reversal. Thus, if we close on Friday night, tomorrow night, either over 47.49 or under 45.22, then we'd be on. Anything in between and would have the lesser outside week pattern. Right now we are looking at a possible weekly key reversal up, though there is still some time to go to confirm this. But it would be an interesting weekly key reversal up at the bottom of a long fall, if it does happen. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.